What is going on, guys? Welcome on into today's video, today's stream. We are looking right now at the S&P 500 ETF SPY. And the question of the day is this pullback, which SPY for the first time, it seems like in a while, actually this morning was down over 1% on the day compared to yesterday. A pretty substantial gap down. Good news is that we filled the gap back up. So we don't have, at least there's one less gap on the chart. Essentially from yesterday's close to today's open, which we just filled that just about 20 minutes ago. Now, why did we get this big spike? There was actually, this spike was news driven to send us up towards the high of the day that we just saw 10, 15 minutes ago, and then we've now been coming back down. This spike right here to the upside was based off the FOMC minutes that were just released about 1 hour ago, okay? So here we go. Inside of this, we just get essentially their summary of what they pretty much said at their last meeting when they raised rates a few weeks back. Now, there's nothing in here that, to be honest, we were like, oh my gosh, let's see what they're going to say. That was going to be massively, drastically different from what we already knew. Like, that's number one. Let's understand that, because that's the biggest thing. Everyone kind of freaks out, and there wasn't too much hype going into this, but we did see a pretty decent sized reaction, about let's say like a 0.5% move on the S&P off of this. So this is coming after they raised by that 75 basis point hike in the last Fed raise. What they've essentially come to say, and these quotes are noted, or at least interesting, is that they are saying that, hey, right now we still see a more restrictive stance to be appropriate with more hikes to come. The market right now is pricing at a 50 basis point hike. We can look at that in a second. But inside of this, just like we kind of got off of Powell's speech, a couple weeks back, the potential signal, right? The potential signal of a pause or of a, reversal of a Fed pivot, as everyone's been saying, right? That's essentially, where everyone's jumping the gun in terms of the market seems to be jumping the gun a little bit. But it's possible that as this policy tightens conditions further, they're going to have to slow down their pace of rate increases to adjust to the current economic activity and inflation. And really what it comes down to is inflation. That's where their focus is. There's not too much in here that they're saying that's them going out like, hey, we are going to wait to see how this market reacts. And if we see other signs that might not be due to inflation, we might need to pause, or we might need to increase. They're pretty dialed in and pretty focused on this inflation. That's the key. And then there's a couple more things going down, that there's could be elevated risks that it's possible that we don't get inflation back to 2% because it's just kind of more entrenched than people realized or than we thought, and then blah, blah, blah. And then that's more of a downside risk for the economy, for the markets. And then at the bottom here, note this. Some members of the committee noted that the Fed could overdo it with rate hikes, underscoring the importance of not being tied to forward guidance on moves and instead following the data. Okay? I agree that that's important to note. And the thing that the Fed, they're in a tough spot, like we've been saying too, is because here's the thing. Like, you can look ahead and say, we're going to keep raising, but you're not going to really see those effects until months and quarters down the road. So how bad is it going to get? But you don't really know, because right now inflation's still high. So it's they're in that weird spot of well, what do we do? Do we slow down and see how it kind of goes in the coming months? And that seems like that might be the way the market's, identifying. At least as of right now. So I want to pull up really quick. Let's pull this up right here. And then this is going to be the current projections for their next Fed meeting, which is still 34 days away, by the way. And they're currently now looking at a 60% chance of a 50 basis point hike versus a 40% chance of a 75. It's kind of the same deal. I think we're probably going to lean towards that 50, but this is going to also change once we get September CPI, which is coming out in a couple weeks. So, 3 weeks or so from now, roughly. So that's the deal. I mean, September CPI will be the biggest next driver in this, puzzle. So if September CPI comes in ahead of expectations or higher, good chance we probably lean towards 75. Comes in line or lower, probably a good chance we go towards that 50 basis point hike into that September 21st meeting. Then about a month and a half later, November 2nd, is the next meeting or the next rate hike, potential, right? They could obviously do an emergency one, but it probably not going to be the case. There's not, unless something crazy happens, which, could happen. It's unlikely, I would imagine, that's going to happen. So what do we got? So SPY hit up to 429.50 as the high of the day, and then the low of the day actually is down towards 424.54. So a little bit more range than it seems like we've been getting the past 2 days. We've been getting some more range, ups and downs, more volatility to say the least. So yesterday we had this pretty big move, and then collapsed towards the end of the day, and rallied back pretty hard into the close, and then had this gap down. Today, we're kind of setting up, and we're actually, that's funny, we got rejected right here, right in line with the highs of, the highs of Monday. So that's the spot. So 429.50 is going to be your line in the sand for right now. And it's kind of, I guess you can almost think of it as like almost a head and shoulders pattern too on this 5-minute time frame. It's, I guess, sure. If you want to call that a shoulder and this maybe developing a shoulder and this being the head, that's for now, that's your setup. So over this level starts to invalidate that if we get there. But something to watch going forward, and we'll see if we get a test up there again towards the end of the day, or if we fall back down towards VWAP into the close on SPY. This has been these gap fill trades, man. Let me tell you, these gap fill trades have been killer. So essentially, what we closed yesterday right here, we opened this morning down here. This is your gap, overnight gap, and we filled that gap. Eventually, we've been filling this gap. It seems like every single day on SPY, IWM, QQQ. It's been a good trade. So that's that. September CPI. Let's pull it up. I'll pull up the CPI release. I think it's September 10th-ish. No, September 13th. So, okay, so technically it's really August CPI. So August CPI comes out September 13th. So it's actually still like a month away. It's so far off. A lot could change. A lot will change by then. And then September's CPI technically comes out October 13th. So another reason why the hedges out to September 16th could be a good idea, because you do also cover that CPI. So they'll still have some juice to them in terms of contracts holding up until after that CPI, depending upon the direction. But that CPI coming out on the 13th, literally that's 3 days before the expiration on the 16th for the monthly expiration for a lot of options. So that's kind of it's something to note, right? And then October 13th is the next CPI, and then October 21st is October's monthly expiration for a lot of options. So those are some of the strikes that you're probably looking at if you're looking to hedge, or we've been talking about. So just note that if you're playing the October, if you have October puts or call or whatever you're playing options, and you're playing October 21st, I believe is the date, expiration date, you will be covered for the next 2 CPI readings. Which could be useful to you. But again, there also is substantial, if you're playing puts to hedge, there's substantial downside there too, because if the CPI comes in similar to what we had this past, July CPI in August, last week, you can get a blowout move to the upside, and that could just be what commences a bigger squeeze out. So just be careful. I think like you've been saying, a lot of people want to short this rally. And it's a little concerning, some of the stuff that I've been seeing when it comes to that, because I don't want to hedge. It's tough because you're looking for, you're looking for like a 5% pullback. Let's just think about this, right? So a pullback from our line, which we hit yesterday. So we got there. I'm, still in some positions that I had short. I did take some profits. I'll tell you what I took profits on, just in case, because this market's been kind of nuts anyway. So this is about a 4.5% pullback to fill this gap from yesterday's high. So that's what I want to see. That's the type of pullback that I want to see. Nothing crazy. It's not like a 10% pullback, a correction, whatever you want to call it. 4.5% pullback would be all I really want to see across SPY, across the overall market, for me then to say, okay, now what's going on? Let's see how other stocks are holding up, the 10-year, what's growth versus tech versus, let's say the Dow. Where are the outperformers right in this market? Or underperformers is what you want to look for. So that's kind of the target that I have now on that. We'll see. We can go lower or whatever, but at least in the meantime, that's the spot. I just got a notification from Robinhood. Let's see. Okay, so I have a shop. So I ended up selling, I can pull this up in a second too, but I got Shopify 37 puts that expire this week. I had 3650s. I decided to roll them up and actually cash flow a few extra bucks from this position by rolling up those puts that I sold to 37. Why? I'm looking at this and I'm saying to myself, the more I look at these charts, the more I see, yes, obviously there is substantial risk that we could go lower on the markets and the overall market and we end up getting a little bit of a fake out. But based on how much shorting is going on, Shopify at 37 versus Shopify at like 34 or 33, I don't really care that much the difference. And I'm going to hold this position and sell covered calls against it anyway. And it's a pretty, in terms of the option chain, they're pretty juicy in terms of the contract. So it'll hedge myself on the downside a bit by getting it. And I think that in the mid to upper 30s is a good spot anyway. And by selling the puts, I believe I sold over 50 cents in premium, so over $50 in premium. So I mean my net cost basis on this, if I got filled at $37 by the end of the week. So if Shop finishes under 37 this week, I'm going to be in the Robinhood portfolio. My cost basis is probably closer to like 36.50 or even lower than that. So that's where I'm at there. Well, here's Shop. Let's see what we got going on in the Robinhood portfolio. So today it's down. Of course, it's going to be up and down with the market. I literally don't care about this day-to-day number here. I'm looking more week to month is what I care about, on this portfolio, and to see how it performs and how it cash flows and the rates of compounding over time. But we have a Snap 13 call. So Snapchat is at 12.15 unless Snapchat were to rally exceptionally hard into the end of the week. That should expire worthless. So we'll hold our Snapchat there. And these are all options that I sold. We have a Shopify 37 put. So if Shop finishes under 37 by Friday, I'll be in, which I'll be on a plane Friday afternoon at that time. So hopefully I'll have a decent idea, to be honest, like where Shopify is, Friday midday before I leave. So I'm like, okay, we'll see where we're probably going to get filled or not. It doesn't really matter though. I just have a Labu 10 put. In case it came down to 10, I'll buy another 100 shares of Labu there. It doesn't look like it's at $11. It could totally drop down another $1. Yeah, sure, it could. But we'll see. And then I'm fine buying that there. It's another kind of bigger picture that I'm looking at. I want to buy pullbacks on those anyway. And then, that would also line up with a pretty good spot, I think, to start, nibbling back into some Labu calls for, next year expiration timeframe. I sold a Labu 14 call for like $20 this week. So cash flowed $20 right there because that's going to pretty much expire worthless unless Labu makes a $3 move in the next 2 days. I highly doubt that. INTC Intel, we sold a 38 call. That's nowhere near that. Intel is at 35.78, so that's going to expire worthless. Sold a few bucks for that. Fisker $8 put. Fisker's at $9.17, $8 puts, unlikely to get into the money, so we're not going to have to buy Fisker unless something happens. It could. And then a CCL $12 call. So it's funny because CCL spiked up yesterday, well over $11. Here's the chart. Spiked up yesterday on Carnival Cruise, well up over 11. I think 11.35-ish. Once it loads up, I don't know why it's taking forever. Once it loads up, and that's when I sold the call immediately into that move. I was actually at the gym. And I sold that call immediately. I was like, these are your opportunities. When you get a spike like that, this is the opportunity. So it hit up to 11.35. I didn't sell at that. I sold it like somewhere when it was like 11.09, something like that, whatever the number was. And it turned out to be a good time. So I didn't do anything on CCL at all. But, I waited essentially for it to make a move or to have, for it to spike up, spike down, have an outlier move on news, whatever. And they had some positive news about bookings or whatever. To actually do it, and we got it. We finally got it, so that's when I used that opportunity to sell the call for a little bit of a higher premium to cash flow a few extra bucks. Realistically, what I should probably be doing, which I'm not, is I should be tracking every single week how much I'm cash flowing from this portfolio. To be honest, I haven't really been doing so. I've just been kind of doing it, letting these expire worthless and saying, oh, it's roughly like $50 this week, $40 this week, 60 here. This week, I think we're probably going to be, if all these were to expire worthless, if all these options, I don't know if they will. I think that it's a good chance the Shopify put hits if we do see some further weakness, which we're getting right now, which we'll come back to in a second. If all of these were to expire worthless, then I probably cash flowed close to $100 this week from all these covered calls and puts and all that stuff, or selling puts, whatever. So we'll see, but they might not. They very well might not. So as we've been talking, Shopify is hitting down towards low of the day. SPY just took a little dump. Look at this. SPY just, crap in the bed here a little bit, right back into where it was prior to that Fed minutes reading coming out. So SPY's got some more range to it. That's a $3 move in the past hour. It's less than that. It's pretty good. And we haven't been seeing this type of action, to be honest, for a while. So there you go. It's kind of good to see some movement, some more volatility, I guess, for those who are, actively kind of trading, or, we haven't seen, it's been kind of slow. We've been kind of melting, as we've been saying, like almost like it's been, the term melt up is not correct in this sense, but like it kind of feels like we're just kind of slowly just kind of grinding higher is what it's been the past couple of weeks. For the most part. Another Apple, let me tell you, look at this. This was surprising. So I played Apple puts this morning on the small count, lost on it for like whatever, $15 on the small count challenge. It is what it is. But I mean, the strength here has been very notable. Very, very notable here. So this is an interesting one. I was looking to short it versus yesterday's highs. We had a double top at like this 173.71. We popped up a little bit in the after hours yesterday, but whatever. I was looking to short it versus that level. If I zoom in, we got up there and then immediately broke through and pushed above, came back down. Yeah, there was opportunities. Had I, looking back, hindsight, no, this wouldn't have been a good trade either way, because even if I played yesterday after hours highs, that's still like 174. We still broke above 174 by about 50 cents anyway. So I wouldn't have held that trade anyway into that move. So who cares? But the strength there has been crazy. So in a day where the market's down, the NASDAQ is down like 1%, lower percent. The Russell's down 1.5%. S&P's down 0.7%. Apple's up 1%. Like it was up a lot more even just like 20 minutes ago. Crazy. Apple, look at this. Breaking out over at this little downtrend right here that we've been seeing on Apple, which is pretty notable here as well. So Apple, man, you're like literally less than $10. Less than $10 from all-time highs. Like, you want to talk about where you want to look or where you'd want to go for playing with the strength on a pullback? Dude, this is probably a stock to maybe pick up some 200 calls. If we get a substantial pullback, pick up some 200 calls and into next year and run with those if that's kind of like your lottery, play for a bigger move in the markets to go higher, right? Because Apple, if SPY gets up to, let's say, even close to like 450, 460, close to the highs of, what is this, late March, yeah, Apple will be at 200 plus. I think it would be, if Apple at least be all-time highs, it'll be probably pushing $200 if SPY got to 460 realistically, which is kind of crazy to think about. But yeah. So right now, if we just look at this chart, this is the daily chart. Each of these candlesticks is one day. It's actually a good sign if you're bearish, because you essentially rejected at the highs of Monday. So if we zoom in a little bit more, you're rejecting right now this blue line, which also is a strong area of resistance. So this is a good sign. When we had the original drawdowns like months ago, we saw something similar to S&P. And obviously hindsight is 2020, but I remember looking back and we had maybe it was the March push, I think it was, or something like that. We had a push over an area that I was watching to be resistance, and then we broke above that, right? And I was like, oh shoot, like we're breaking out, here we go. And I didn't, play it long, which is kind of more so watching it, right? I had other positions, wasn't playing the S&P, other positions, whatever. And then we came down. I think we had a very similar gap down, and we pushed up, and then we got a hard reject right at the prior days, or right at the level that I was watching prior. And I was like, oh, that's not good. And then we ended up selling off massively in the next couple of days or weeks, obviously from there. So setting up right now, if we stay below Monday's highs, there's your head and shoulders look on the short-term time frames, right? There's your head and shoulders, which is a bearish pattern. So, you would look for right now is continuation below today's low into the end of the week, and even maybe to next week. I'd say down towards 420. The next key spot in terms of support is going to be towards like 418, 417, the top of this box. This box, let me get rid of some of these lines. This box that we're looking at, the purple box on the screen, that is the gap up that we had in the pre-market hours when CPI came out last week on the 10th. So we end up closing the day before at like 411 something, and the next day we opened up, once the market opened up here at like 417, 418. So we had a pretty big gap up on that day. And that's what I'm looking to potentially fill us back to the downside in terms of targets for, hedges and for shorts that I'm in right now. This is what I want to see. If we get there, check that box, and then we could see how the market holds up, see if we see any dip buyers coming in. If volume comes in, we'll see where things are when the time comes. Then it's like, okay, now start to look for deals, start to look for stocks that you might want to pick up and potentially hold for the next, X number of months, weeks, whatever the time frame you're looking at is. But I think that overall market support could be found there, and obviously we can go much lower, but that's going to be a key spot to watch first. So that's bigger picture. Here's the daily chart. That's our area. So it comes down to be about 412 or so, 412.50, roughly 412, give or take $1 or so on SPY. So we still got to get about another almost $15 pull to the downside, which isn't that much realistically, but that would be what you're looking for. And also, I wouldn't be surprised in the coming days and in next week and the week after that, I would not be surprised if we're going to start to see some stuff from the Fed or from Fed members who are going to be actively trying to walk the market back by threatening to raise rates more aggressively. Now, who cares, right? Realistically, the market didn't seem to care the past couple of weeks anyway, because they kind of tried to do that. But I wouldn't be surprised if the sentiment and the talk on the street or whatever, word on the street, CNBC, wherever you want to go to find, to get your financial news, becomes a lot more bearish and becomes a lot more focused on, these hikes and stuff. But what it comes down to at the end of the day, as we've been seeing and being told, if that September CPI print for the month of August on September 13th, if that number is down again from last month, and it's down below expectations or below projections, market probably will rally off that. Probably. And, the Fed's been saying that we want to see, a substantial hit to inflation before we even think about taking our foot off of, or, before we even think about slowing down the hikes. So 2 months in a row of that CPI reading coming down, market's going to go, whoa, that's good. That's really good. That's actually really, really good. And then we could rally off that substantially. So we'll see. But we'll see where we are when we get there. Ideally, I would like to see a pullback in the meantime, but doesn't mean we're going to get it. A lot of people are trying to aggressively short this this market, I think, right now. And we've been seeing futures, S&P futures are at the highest. This week, they were at the highest short interest level we've seen since June of 2020. Which is when everyone was trying to short the pandemic rebound, and then we end up going to all-time highs in September. So see what happened back then? We can see the same thing happen here, and the percentage returns is not that far off. So from all-time highs right now on SPY, we are roughly 12.5% away. So let's just note that. We're 12.5% away from all-time highs right now on SPY. If you were to go back to that June of 2020 timeframe, that was this area right here. Let's just go from bottom to top. So lowest point in June to all-time highs that we then set in September was about a 20% rally on the S&P. So, okay, like you see what it did then in a couple of months. It could certainly, we've seen it happen. So it could totally happen again if everyone's trying to be aggressively, trying to say, oh no, we must go lower, short, and then as time goes on, and if these numbers, inflation comes down, you're only going to get closer to that pivot anyway. So as time goes on, you're getting closer and closer anyway to a pivot. At some point, that pivot becomes, X number of months away instead of, a far distant idea that I think the market was running with the past 2 months anyway. But let's see where 20% from here gets you. So 20% from where we are right now gets you off our screen, gets you beyond what I could even see. So what is that? Let's zoom this a little bit better. 20% from here gets you to, this is just an arbitrary, it's kind of random. We're just going off of the rally that we saw from June lows of 2020 to, the all-time highs that were then hit in September. Do the math, 3 months until to all-time highs on the market. So if we got a 20% rally from here, which is a lot, that's 515 on SPY almost. It's over 510. Which is nutty. If we got something like that, I wouldn't want to be holding Jack overnight. I would be like, all right, I'll let this thing do its thing. There's some momentum plays, small caps to play. It's a hot market. It's meme stocks. It's short squeezes. Cool, have fun, and be in and out. Move along pretty quick. But In terms of buying some stuff bigger picture for longer term, no. No, I would not be interested in at that point. Obviously looking at other sectors, or maybe sectors that have been beaten down in the span of time, which is possible, but to some degree, a rising tide is going to lift a lot of boats anyway. So 10-year treasuries up today. Yes, let's pull that up. And I'll jump through some of the chat here. So the 10-year is up around 2.9-ish. It actually popped about 2.92 briefly today. Pulled back. It's been just kind of jockeying around. But the trend here on the 10-year continues to be up, which is why I think you are seeing weakness in, let's say, growth, small caps. You're having the short squeeze stuff kind of popping off. Yeah, sure, but not as aggressive as maybe it could be if the market was like ripping and the 10-year was falling off. If you look at this right here, I know it's small, but S&P right now, SPY is down 0.6. QQQ is down 0.98, so almost 1%. IWM, the Russell, small caps, is down 1.5%. So you see that NVIDIA is down 2.5%. ARK is down nearly 5%. So Cathie Wood, the innovation stocks, the growth names. So you're seeing that. I think what you've been seeing is that this move, which isn't like crazy on the 10-year, but this move the past couple of days or past like 2 weeks or so has been a limiting factor for some of those names, because they had some stronger rallies back here in late July. But as August has kind of gone on, you're seeing, even we just look at Shopify a few minutes ago. Right? If you just jump back and take a peek at Shopify as an example of this stock, and we got to zoom in because the chart's all wonky a little bit, but no, not even. Here's the chart from May, or the left-hand side is April, so coming down off the highs late March throughout April, pretty big drawdown on Shopify. But what's Shopify done? It's actually not even been strong. It's actually just kind of been in this consolidation the past couple of months. It's just been consolidating. And even the past couple of days, it hit up to 45 back on August 11th, but it's down to now it's 37.50 right now as we speak. So this is actually not that strong, despite the market being, within striking distance of all-time high, or within striking distance of the relative highs off of this rebound, and Apple pushing up to new highs off of this recent rebound. Not all-time highs, but, off the recent rally without any substantial pullback. So you're seeing some weakness there. Here's ARK. ARK Invest is at, 48.31. So it's got some more pullback there. And you generally tend to see, it's still building higher lows, can't deny that, but you generally tend to see a bit of a lag. So if the 10-year continues to kind of slowly kind of glide up, I would expect that ARK will probably not just go straight down. It's not going to do that, most likely, unless the market were to do something crazy. But I would expect ARK to kind of flutter off and kind of slowly fall off as well if the market held up a little bit. There is a trend here, though. And it's a notable trend, and we are right on it right now on ARK. So it's a pretty steep trend. So I wouldn't be surprised if when this trend breaks, there's going to be some good opportunities to short this thing, I think, in terms of just from a technical perspective. You might get a quick move from 48 down to 44, and that could be a good spot to take profits on a short on ARK if you're looking at that, if it breaks this trend line. And right now it's holding it. Wouldn't be as bad as about to go long if you're assuming that we're going to hold it. But with some weakness in the market, you could be setting up for this to finally crack down, and the 10-year being strong, you could be setting up for that pullback there. On that, XBI, the biotech ETF, is breaking down today as well, which good and bad. I want this to happen, which I'm excited for, because I think this is going to go a lot higher in the coming months. But in the meantime, I do want to see this thing come down back to the mid 80s, get back up to the highs of this recent consolidation. Right back in here is what I want to see. Which right now we're kind of holding on at 89. Let's give us a bigger flush here, I would like to see. And then if we get into the mid 80s here, that is where I'm going to start picking up my Labu again. That's what I want to do. And then we'll be slowly kind of dollar cost averaging in if we do go lower. We'll see where we are. I don't know if we're going to go much lower than $80. We could. Obviously, anything could happen. But I think that with this recent strength, I wouldn't be surprised if that $80 area holds up on XBI, which would put us probably, let's look at Labu, the 3X ETF, 3X Bull ETF on XBI, puts you down towards like $8 or so on Labu. Just something to think about in terms of like the range of where this could go. So, that's something to note. I think if we get down to that area, I would like that a lot. I would like it a lot. I'm not expecting that. I'm thinking $10 first. Let's cross that bridge first, and then into the 9s. And then that could be a spot to start averaging into some later dated, 6-month time horizon option positions, at least I'm thinking. So we'll see. We'll see. JetBlue. I got rid of the my JetBlue, just took the L on it because it had been taking kind of forever, and it really hasn't done anything too crazy. Yeah, popped up a few days back to 9, whatever. Oil being down has definitely helped. I think it will do well if the market wants to rally, bigger picture, months from now or weeks to months from now. It is building these higher lows for now. So as long as JetBlue holds up over like $8, looks okay. The current higher low right here will be down to like 840. So, we'll see if that breaks, but it's trying to it's trying to build that, that base and make that turn. It's pulled back a little bit off the recent push, but it's not a bad looking chart, at all. If I zoom this into the 1 year, it's at the 50 SMA, got some volume support down here, higher volume node at like 850-ish, means a lot of shares were exchanged at that price. Got some small gap ups to fill. I mean, there's range. This JetBlue can be a nice rebounder play for sure. So I don't dislike it. Let's see. The Apple's moving. No, yeah, I'm very curious to see what happens with Apple because it seems like it's so freaking strong, but how long is that going to last? And will there be an unwind? Is this move, this like teaser move, this like final push up before an absolute rug pull? Like, I don't know. This rally, it's not as, I guess, intense as the rally we saw in March, because in March there was like 13 days in a row or something like that Apple was up. We had some red days in between since like mid-June, but still the extent of this rally is wild. The March rally from the lows, March 14th lows, to the March 30th highs, Apple rallied 20%. But this rally is insane. It's been 2 months, and so not 2 weeks, but 2 months. We went from 129 up to hitting highs today of like 176. Jeez, that's 36%. That's insane. That is nuts on the Apple rally. But yeah, something's going on there. So something's up. It's strong for now, and it's strong until it's not. So, don't just think this is going to be strong. I guess I'll buy the dip on Apple. I mean, that's just what I feel like a lot of people are. That's common psychology. Like, it's been strong. I guess I'll buy the dip here. I'm not sure what else to do. I'll just buy Apple, I guess. If you were buying Apple, 2 months ago or 3 months ago or even a month ago, yeah, great. But now it's like you missed out on 36%. It's not necessarily the best buying opportunity. So higher we go, the more anxious people are going to get to protect profits. Geez, I know it seems like you're going to have that at some point, a profit taking, which is going to be like kind of the deal. And then the hedging, the problem is I think there's a lot of hedging going on. There's been a lot of hedging going on, and there's also been a lot of shorting going on. People are just straight up short, like, hey, like we're not going higher. I'm going to be short right now. And I think that next pullback is going to be very, very telling. So like we've been saying, if we get that pullback down towards like that 415, 412 area on SPY, what does it do there, right? Does it hold this? Does it come down to like 417, bounce immediately, right? Like if it does, and we break this trend line, get over the 200 period moving average at some point down the road, this could be, I think, a substantial squeeze out up to like that 450 to 460, I would say up to like 458 on SPY, right up into there. That's going to be the spot. I think this is a little bit of a volume node, looking back. I think that will be the spot. So if we do get, if we get a dip, it allows people to kind of position further short, double down. Okay, they're seeing some validation on their shorts. Okay, great. Add into the winner now. And then we hold some higher lows. We start holding up, and we start to kind of grind higher, which no one may think is going to happen, or no one believes it at the time. You start breaking resistance again. You break over the 200 moving average or the prior highs we just set yesterday. I mean, you could squeeze out for a nice chunk of change, nice $10 on SPY easily. I would say easily. So that's the risk of the short side right now. Let's see. Down 820 on Tesla calls. Let's see where Tesla's at right now. Tesla calls. Let's see where she's at. I mean, the reality, we were looking at Tesla like last week when it had these higher lows based off that 840 pull was nice. But it's right now, it's just, you're at a key spot on Tesla, I think. If you look at this chart, let's see. This is a key spot right here. So We had substantial resistance back in January, February when it fell below and then came back up into like the 940 range. Okay. Then we fell below. We had gotten up to that 950 and then got rejected pretty hard back in May. Got rejected there again just a couple weeks ago, August 4th. And then so far yesterday, we got rejected there again. So this is a key spot. If Tesla can break over this 950, oh man, this is probably going to $1,000 quickly. But if it keeps getting rejected here, this is your key resistance to watch on Tesla. So I'll leave that box in there because it's pretty notable for now. So that's what we're sitting at on Tesla. Sitting on Tesla for 4 years. Yeah, no, that's the biggest, you could try to chime it, and it's tough. What I was saying too a couple weeks back is I really wanted to see, we may not get this, and I don't think we're going to get it unless we get a really big pullback. I wanted Tesla down here. I want it down at like 750, 760. That would have been a really nice spot on a pullback after it broke through resistance. It just only pulled back to like 840. I was looking for like another like $80 or so, but whatever. It is what it is. You're not going to get them all, right? But I think after the split, which is on the 25th, post-split interests me. It definitely interests. If we get a pullback, it definitely interests me. So we'll see what the market's at. I was also looking at Upstart today, which is like a nutty chart. This chart gets me going in the morning. I mean, look at this thing. This is like, I guess it's a large cap, right? It's not a small cap. But let's check what their market cap is. Their market cap is $2.8 billion. So what is the classification there, technically speaking, based off of FinViz? $2 billion to $10 billion. It's a mid cap. You can call it a mid cap, I guess, right? So this is this is another one. This honestly, I kind of like more than Shopify if I'm looking at this, but it's probably going to be a lot more volatile. So that's why I prefer the Shopify for the Robinhood. But I was thinking about this as a play too in the Webull portfolio, maybe grabbing some calls here. But if we got a rally in the markets into next year, I would say that you can like legitimately target this gap fill. Let me highlight it. This gap fill right here. You can legitimately target that, which is like up to $78, which would be like 100% move roughly from here, which is insane. And Upstart is a stock that hit up to $400 a share, last year. Insanity. So this is another one of those that like you can sell covered calls on. You could grab shit. Like this is an interesting one. This one gets me very interested, especially if we go into a risk-on environment. The 10-year rolls over. The 10-year starts falling off. Yeah. No, yeah, for sure. I mean, it's volatile as hell, down 7% today, but you have to expect that or come to expect that with your position. So it's not like it's the end of the world as long as you're willing to, accept that risk or that volatility. Who cares? Chart-wise, your lows of the year were down to like 22. You're at 33, so your downside risk is like 10-ish bucks to those lows. Obviously, if it goes below that, it kind of invalidates the trade. And I would imagine we're probably seeing something bigger macroeconomically that's sending us there anyway. But if growth did bottom, then geez, man, the risk reward on dips from here into like the next like year or two on a play like this for that rebound trade, geez, because it hasn't really seen it. Like it's bounced off of the lows. Like, yeah, sure. It to yesterday's highs, it bounced 60%. That's a big bounce. Right? But if this thing pops back up to even $50, that's a killer play. That's a killer, a killer buy down here in the 30s. I was looking at that and I was getting interested because I like the risk reward on small caps into the end of the year and even into early next year. I think we'll see. But I think that this end of the year into next year, we'll probably see something more like normal for small caps in terms of like, they're generally hotter biotechs. We see, penny stocks, sub $1 stocks perking off in like January and December and around the holidays. Sometimes you get these like crazy runners and whatever. I wouldn't be surprised if stocks like Upstart too had, some, this is a stock that has a penny stock-esque chart but it's a mid cap and it has a little bit less volatility. You're not going to you could off bad earnings or whatever, but you're not going to drop, 50% on an offering, most likely on an upstart. Whereas like a small cap penny stock, yeah, you always have that risk of, also the delistings and whatever. Upstart, you're probably not looking at that risk right now. So there's a little bit less risk in a play like this, but it offers chart-wise risk reward or chart-wise range. It offers a lot, I think. So something to keep on the radar. I logged it on my own because it's been on the radar, but it's something to now really keep on the radar, especially down here. Especially if we get that, we do get that macroeconomic, turn into next year, into the end of the year, where we start seeing a much more risk-on approach. We kind of have seen it for 2 months, but that's not, it's 2 months. Let's see how things play out on a pullback. Let's get a pullback in the market and see where the market shakes out after that. Is ideally what I want to see. Made some money on BBY, but give it all back to Tesla. Solana. Yeah, no, Bitcoin is notable. Watch this. We just broke below the uptrend on Bitcoin of the past couple of weeks, and in a pretty substantial fashion. Not like we didn't like dump off a cliff by any means. Let me just adjust this chart really quick. But definitely, notable here because Bitcoin was kind of building these higher lows, but now we're breaking down. So if it falls, like we've been saying, under 23K, it's not a good look. But it's breaking out. It had these false little breakouts too to the upside the past couple of days on the 11th and the 15th, where it broke above 25K briefly, and then it came right back down. Those immediately, coming right back down and selling off after hitting 25K or popping above 25K was notable to me. And I was like, that's not great. Hence why I had the Mara short. Let me check on this guy right now, by the way. Mara down towards lows. I had added to this yesterday because I saw Bitcoin be, getting weak. I took off one of the contracts today because it's down freaking 8%. Like, sure, yeah, I'm gonna take one of the 3 off. I only had 3, so it wasn't a crazy size position, but I had 3 of them, so I took off 1 and I'm holding 2. I'm targeting $14 first. And then I want to see how it reacts to $14. Bigger picture though on Mara, like this trend line is about to crack on the daily chart. So let me give this a second to zoom in. Yeah, here we're at the trend line. So you're either going to get a bounce here, and we're going to find out tomorrow or the rest of the week, or you're going to come right down and probably hit 14 very, very quickly, especially with more market and Bitcoin weakness. Let's see. It's tough. The patience side of things is, you realize it's tough, but you sometimes, it's because you're trying to do too much when it's like, maybe there's just nothing to do. There's just nothing to do sometimes. What's going on? Joel's in the house, stored natural gas, some Apple puts this week. Yeah, I'm not sure. The risk reward is there on Apple for sure. I just don't know. Something's going on. I'm not sure I want to fight that. If we see further strength on SPY into the end of the week or next week, just squeezing out shorts like people who are trying to be too aggressive, who's to say Apple can't hit all-time highs next week? It could. That's the only concern. It's breaking the downtrend now. So from a technical perspective, it's a little bit scary to short it here. I don't know. Even though the risk reward is nice, I get it. Yes. But I think a lot of people are thinking the same thing, unfortunately. So good for a hedge. I'm just be cautious on that front. Don't be too aggressive. I think there's probably just looking at SPY. And yes, okay, if SPY goes down, Apple should go down. Well, SPY's down today and Apple's not down. So they don't always work perfectly. But SPY versus this 200 moving average versus yesterday's highs could be a good spot. Or honestly, SPY versus Monday's highs, because that's where we got rejected today. If you get above Monday's highs, which are right here, 429.50, if you get above that, very good chance you're going to make a run to break over the highs of yesterday, 431.60 something. That's the look on SPY. So we'll see. We kind of a higher volume node right here, like 426.50 or so. You want to see it flush through that area now. 15 minutes to go into the close. I don't think that's going to happen today. Most likely that's not going to happen today. But maybe we get a gap down or tomorrow's move. You want to see this thing kind of breaking down. If you want, downside, you're looking for this thing to start breaking down below some of these levels and give us a push down to 420 and 417, 415, that type of stuff. Upstart covered call port. Yeah, I think it's not a bad idea. The problem is that Shopify is probably going to, if Shopify gets filled I'll pull up Shopify. If this gets filled, then I'm going to play it there. I might just grab it in the Webull with some calls anyway. So Shopify, yeah, we're probably going to get filled now. I mean, I have 30. Oh, no, not really. I have 37. 37.25 is where it's at now. Yeah, I have 37 puts that I sold. So looks like we should get filled on those if we keep this trend to the downside to finish off the week. So we're going to see. But yeah, I like Upstart there. I think Shopify's a little bit less volatile than Upstart, which is why I tend to prefer this one over Upstart. But, 6-1, half. I mean, it's not necessarily 6-1, half dozen the other. It's they're different stocks. They're going to offer different risk reward profiles for sure. But, you got to pick your spot at some point. So Upstart, maybe I'm thinking like if we get a little bit more of a pullback, here's Upstart on Webull. I'm looking at the option chain. I'm saying to myself, all right, January 2023's like, what are we looking at here? If Upstart came down $30, upper 20s again, maybe these 35 calls that are currently trading for like $7.50 right now come down $5-ish, $6. Those maybe have a little juice to them. Maybe that's something that's worthwhile, because if we got to move in the next 6 months, I guess it's like 5 months, whatever. An Upstart, and you have to be, this has to be like your risk on type of trade. Obviously, it's not like, just going to randomly buy Upstart and buy some random option expiration. It's like, no, like you have to back into the trade. Ideally, I wouldn't want to touch. I would want to go out to like March, but there's nothing available out past January 2023. The next one's January 2024. So I'm not going to touch this until either it comes down a little bit more, and I'm like, I really think that we're going to get this reversal back to the upside, and I want to grab them, or I buy some March, or even you can go out to even 2024. The spreads are a little too big. That's the only problem. So that's the idea. I might play that here. I'm looking for something like that, like an Upstart could be one, a Tesla could be one, post split to grab in terms of a swing trade, because I'm kind of light. I was looking, if I don't end up getting the spots that I want on like SOXL and Labu, which we might not. I'm honestly, I'm kind of pissed, but like also like I'm not going to be super greedy because I don't want to get screwed in this environment. But like if we don't get SOXL, and this doesn't come back down to that 50 SMA or lower, I think it can come lower than that. But if it doesn't come back down to $17 and I don't buy anymore, and am I going to be pissed? Let me go just to get this volume out of the way. If it doesn't come down to $17, 50 SMA, and I don't get a chance to buy some more, I have what I have, and I'm not going to probably buy them, so I'll let it kind of ride. And that's where maybe playing something like an Upstart or a Tesla, or something that's a little bit more volatile than the S&P to play for a potential risk on rally on top of some of the other back burner positions that I have. Yeah. Soxel though, I mean, man, if we got a true risk on rally, I'm thinking $40 is like legitimately possible. But obviously that's not like, no guarantees. None of that stuff's guaranteed, right? So I want to get a little bit lower and then potentially buy some 25 calls out into next year time frame. We'll see. But that's the 20s, 15s are the safer bet, but maybe the 20s or the 25s, a little bit riskier, but could provide some crazy return or crazy reward, right, for the risk. Touching natural gas, no man's land. Let's look at Boyle. Our good friend Boyle. 105. No, yeah, it popped above the highs that we saw back in July, but it's having a nice little pullback today here. I don't know. It's been strong. You can't deny that, but yes. Could it come down, fill these little gaps right here? Yeah, sure. Obviously, cold would be the other way to play it. Play this is the ETF that will go up when natural gas comes down. Instead of playing, you could short Boyle, whatever. Not bad. I mean, the risk reward is not terrible. I haven't been super glued into the natural gas space and the news and the whole situation driving that in the short term. So I can't necessarily, I don't want to comment on like, oh, like I think it's going down. Like, yeah, my speculation is that sure it could. My only concern is that in terms of oil, if we look at oil's chart, I think oil could actually go up from here. Do we get the pullback we wanted to? Yeah, we got pretty close. Past 2 days, we came down to like sub 86. You got pretty close to a spot that we were looking for. So oil from here, I mean, to $95, $100 is pretty reasonable, I think, on oil. So I think that at least oil could bounce back from here. It could go up a bit. Apple announced new iPhones September 8th. Too risky to short. Interesting. But then again, you can get to sell the news, right? So it's a funny situation. If people are like, "What are you can get that, you can get a massive short there too." Think about that. What if they announce new iPhones and it's like everyone's like, "Oh, that sucks," and then all of a sudden Apple dumps off that news and everyone's like, "Oh, this is nothing new. This is nothing cool. Like, screw that." It could dump off that and sell the news event too. If it gets if we get a nice run up in anticipation of that event and it keeps going and we're like closing in all time highs, if not at all time highs by September 8th, it could be a good hedge or a good sell the news short play to have. Buy some September 16th puts and boom, you're in. You're at least prepared for it or hedged for it, right? The squeezer people online piss me off. Yeah. No, yeah, for sure. Baba puts are printing. What's Baba's chart look like right now? Alibaba. Interesting. Yeah, that does not look too strong. I mean, if this ends up breaking below like 88, geez, probably going to come down. There's actually a small gap to fill here too on Alibaba. This is a spot to look at. If you're looking at playing puts here, this could be a target. Down to like 84, so that's not a bad looking chart, to be honest. Not too opposed to that play. Let me see what we can find on Baba puts. I would go to September 16th. I'm not going to play anything shorter than that right now. You could, riskier. Yeah, you can make more money. Sure, whatever. I don't care. So if you bought 90 puts, they're going to go for $5 right now. Yeah, not bad. 85 puts, a little bit riskier for $3. 95 puts, for $8. Yeah, sure. I can see it. The target on this thing, again, back to our trading view chart, the target would be down towards $84. It would be the gap fill, the bottom of that gap fill from back in here on the earnings back in May. So yeah, you're targeting 84 for a breakdown here. Not bad. Ideally, you want to see it stay below this higher volume little node right here up to like 94. So you don't want to really see it go back over 94. So that's a $4 upside risk and about a $6 target. Nothing crazy from here. It's already down a few bucks today. So yeah, earlier today would have been better risk reward. But I like the idea though. And it has room to go. BWV recent IPO to run. Let's see how much is this up. Yeah, it's up 200%. Look at this thing. Blowing up. It's up towards the highs too. Jeez, just hit a new high as we speak. $8. The trend's been your friend here. Look at this thing. I don't tend to play these things, but like these have been honestly pretty cool to watch. Some of these trenders. The only reason why I haven't been touching these guys is because I haven't been really day trading very much outside the small account challenge, so I'm not really trying to mess around with playing these day trading any of these small caps. Swing trades, sure, I'll position myself. And by the way, PPSI had earnings. Here's PPSI. This is it's still above my average, so whatever. If we get a further pullback in SPY, I would like this thing to come down 50 SMA, like 325. I'll start buying more or rebuying. I think I had like 550 shares, 600 shares, or something like that. I'm down to 350, and I took some off, and ideally I want to reload this guy. But PPSI is an interesting one. They had earnings. In the earnings, if you read the earnings, they have, I forget exactly how much cash. They had enough cash, and they even said that they have enough cash for the near future to fund operations, and so that they would not have to dilute shareholders. They literally like that was literally quoted in the earnings report. You can go read through. Like that is the type of stuff that I want to hear, because now this allows me to play this for the hurricane season, and I feel pretty good. Not to mention they just passed the Inflation Reduction Act, which is essentially a climate bill, and PPSI kind of fits that kind of grain, or fits that sector to some degree. So it's not a bad spot to be. POLA, same deal. This one has not provided much of a pullback at all, so I want this one a lot lower, but we might not get it. So I'll just hold what I have and let it ride. But those are the two small caps I'm swinging for now. Or there's actually a third NSPR, but those are the ones I'm going to hold for now, and we'll see how it shakes out. But I think we're going to get some dip opportunities coming up on PPSI, and those are, I think, are valid dips to buy. based on that earnings. So you want to see. What's up? Oh yeah, we've been doing live streams a lot, dude. Yeah, we've been coming in. It's been like at least 3-4 times a week. It's been. But this week we're probably gonna stream every day, and then I'll be away because I'll be away next week, so I won't be on at all. But yeah, after that we're probably gonna be. The streams are fun. I love doing the streams. They're a lot more fun, to be honest, than videos or whatever. The streams are a lot more fun. So I got a couple of videos that I've been meaning to make for a while, and I finally filmed them. I finally filmed them like yesterday, I think. And one of them was covering essentially the past, technically since 2016 is when I've been into the market, but since 2019 I really got deep into it. And then obviously coming into things in 2019, little did I know that a year later I was about to get into one of the most insane markets of my lifetime. Who knows if we'll ever see anything like that again. But there's a lot of lessons from the ups and downs. So I think I have a video that I'm not sure what I'm going to exactly title it or whatever, but who really cares? But this should be it's going to be covering how I went from essentially 0 to 50 something K, fell back down to 12 or 11 K, and then how I've been building back from there up to 30 something K from quite literally a $5 in bank account kid in college with gambling addiction, all this shit that was horrible. A ton of freaking lessons in there, which I like. Those are those videos that people don't like. I guess they're not flashy. It's not oh, I made $1,000 in 2 seconds. Those are videos that I guess people want to see, but I don't care to do that crap really. But there's a lot of lessons in that stuff. So hopefully people get something out of those videos and finally have the chance to film it, and figured that next week, I'm not going to be doing streams, so I'll be away. Not a bad time to post it. Let's see. BWV monkeypox vaccine announcement play. Really good for PPSI. Yeah, I mean, we can pull up let me just pull it up. Because this is the type of stuff, 5 minutes until it closed, by the way. This is the type of stuff that you want to see in a small cap. Holding through earnings. It's risky as hell. Yeah, sure. But when you hold through earnings on a stock that's not hyped up, it's not as bad as it is. Yeah, did it drop 15%? Sure. But when I'm holding a small cap, I'm well aware of that downside risk. Okay, so here we go. If we scroll down, some highlights. Revenue was down. So the revenue numbers weren't necessarily great. I don't necessarily care, because volume, when the time comes and people start looking for a hurricane stock, when the next hurricane, pops up or starts to form, this is one that I want to be in anyway. If you scroll down, boom, boom, boom. Let's see. Here it is. We have increased our investments in sales, blah, 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 blah. But despite the increased investments and maintaining a relatively low cash utilization, we believe we have sufficient resources to fund our near-term growth initiatives without considering any dilutive financing. So no offerings, no dilution in the near term. How long will that last? Who knows? I don't know. Whatever. It doesn't really matter to me. I'm not planning on holding the stock for the rest of my life, so I don't care. But where is it? Where is their cash position? Let me find their cash position. Cash. Let's see. They had about 10 million in cash, which is down from 6 months ago, 11.7. So they're not burning through that much. And on top of that, they're expecting to receive 6.2 million in cash by the end of this year from the maturity of its notes. So from the sale of their transformer business units. So for me, it's okay, they're fine. They got enough cash. They'll be fine. They're not going to do any offerings probably for the next couple of months, unless the stock spikes up, which is great. Okay, great. Buy the dip. If I have the fundamental thought on this play is quite literally hurricane season. If we literally don't get any hurricanes, which is possible too, then yeah, whatever. It's not going to pan out, right? But I find that hard to believe that we're not going to get a single one, despite them forecasting this to be a higher than normal hurricane season. Let's just take a look. The weather nerd in me is coming out, and it will come out, especially if we get a hurricane. It will be out. It will be out for sure, because I'll be looking at this stuff a ton. But yeah, I'm looking at this and then for some people, this is absolutely just chicken scratch. Who knows what the hell this is? But I do see already 2 storms on this. So look, this is tough to see, but where my cursor is circling, this is the Gulf of Mexico right here. We have Cuba, we have essentially Cancun, all that, Mexico. But look at this low pressure right here coming into the Gulf. This is on Saturday, the 27th of August. we got a little low pressure kind of churning in the Gulf, which could explode because the Gulf is like a friggin' bath right now. So, and that's going right into the Gulf states. Now, who knows? Right now, okay, maybe it has Alabama as the target in terms of where it's going to hit. That's doesn't matter because we're so far out the track can change. But all you need is the threat, and PPSI is going to be hit. I almost can guarantee it, especially in this environment. Unless the market decides to plummet off from here, and no one wants to touch small caps again, and it's like, oh my gosh, sell everything and run for the hills. If that's what we are next week or the week after that, then yeah, sure. But then behind that, you have two more low pressures coming off the coast of Africa, which tends to be, where you get a lot of these waves come off and then they eventually form into hurricanes, and then their track either goes out to sea or it hits, Florida or whatever. It goes up the coast, whatever. So there is some not positive realistically for those who have to deal with these things because they suck. They're absolutely horrible, but there is a lot coming down the pipeline, which it's been quiet, but it's quiet until it's not. So that's why I think actually, as I speak right now, I'm going to go snag me some PPSI because I'm going to just grab myself another 100. I'll grab myself another 100 shares of it again and start to reload it as the time goes on here. Ideally, we want to get this thing a little bit lower, but if we get it, we get it. Let's see. So I'm in. I grab another. I'm back to 450 shares, and then from here, I'll want to buy it lower. If it comes lower, I'll buy it lower. 450 is enough. I took some profits on the way up at $4, and now ideally we're looking just this way. This way, I have something there into next week. If this stuff starts popping off, I want to have some more exposure. So that's the idea. But I haven't even looked at this in a while. That's not good, I guess, or it's not necessarily good for hurricanes season because there's something that's already looking like it could form next week in the Gulf. I guess not really next week. It's the week after that. It's the end of August. It's the week after that. So it's the final week of August. So you have probably next week to buy to load up if you still. Well, the key. This is anytime this stuff happens, it's totally like risky as hell because like you're kind of guessing, like if you're buying this stuff before this, like we have no idea, things could never form, right? Whatever. But the way that I found it is that all you have to be is like 1 or 2 days ahead because once it hits the news, it's too late. Once the news is out of the threat, it's too late because the stocks will already be hit. And if they're going to go, they're going to go. You're late. Could it go for crazy runs? Yeah, sure. But you're already late to the game, So you have to be early, and it's not hard, especially with already kind of having a background there. It's not hard to predict that stuff because once it starts to be showing up on models and stuff, that stuff is pretty. The exact track is the complication, but the storm actually hitting or the storm actually becoming a reality is quite. is quite probable once these models start picking it up as you get closer. So we'll watch that, and that's kind of my eye on the PPSI trades into the. It's not something to. I guess next week is your week to still potentially be watching it, but if there's enough forecast model guidance that starts sending us in that direction, yeah, we could be looking at something forming by the end of next week. So we'll see. Still over a week out, so plenty of time for things to change. But SPY closing down 0.71. So it closed down pretty much right back to where it was prior to the FOM, the Fed minutes coming out. And we had the Fed minutes came out. It was essentially the same deal we've been getting. Inflation's high. We need to get it down, and we're going to raise rates aggressively until we do so. But there is a scenario where, hey, if inflation starts coming down in the future, we'll slow down policy. We'll slow down the hikes. That's all it is. And the market has taken that and gone with it to a big run to the upside. Now it may be getting a little overextended. I mean, it definitely is overextended in the short term. The question is now going to be, do we get a pullback and what happens? So right now, got the first substantial red day. How far can we go before we wrap things up? How far can we go? We're targeting right here. At least I'm targeting right here, 412 on SPY. That's the gap after CPI came out. So for a healthy pullback, I mean, 417 or 418 is a good spot first. That's the top of this consolidation. It was a prior resistance. Will that become support? So we'll watch 418-ish. And then if 418 can't hold, I'm looking for 412, 412.50, 412, give or take $1 is the target. Those are the dips, roughly 4% from here to 412. Not that much, but I think that would be a really nice reset. And then from there, what happens? Do dip buyers come in? Do we start seeing the fear and greed go flying back to fear again, and everyone's shorting this market? And that's key. We're into neutral. We were in greed yesterday. We're back into neutral. Looks like right now. No, we're back into greed. So we're like hovering upon greed and neutral right now as we speak. Bigger note to watch here is this. The put call ratio, this is the 5-day moving average or the 5-day average. We're looking at 0.74 right now in the put call ratio. That's good. We're back under 0.8. I still want to see this thing coming down a bit more, ideally. But if this starts to spike right back up, if we start seeing downside and this spikes right back up, 0.9 or something like that, or above 0.9, a lot of people are buying puts again. People are betting on the downside, betting on the shorts, right? You have the fuel there. The fuel is there to start to, if we build a higher low and start pushing back up, to squeeze them right back out and go for even higher. So that's the concern. Whether you believe it, should it happen? Macroeconomics don't look good. Yeah, it doesn't matter. The short-term price action doesn't care about the freaking macroeconomics necessarily, right? In the short term, right? So that's the whole thing. And we're going to see how this plays out. It's going to be a lot of fun to watch, I think, for sure. So with that said, we shall see. We'll have a stream again tomorrow, and then we'll do one on Friday morning, and I got to leave Friday afternoon. So that's the plan for the rest of the week. Shout outs to fellow weather nerds. I legitimately have a degree. I have a literal meteorology degree. Energy business finance minor is my minor, but meteorology was like the major. Weather risk management is if you want to give it the full classification. But I was into that stuff forever. I went to Penn State for it. It was a great school for that stuff, but man, did my classes suck throughout I am not your math physics nerd in terms of I'm not sitting there loving it. I love the weather. I love that was cool, right? Forecasting was awesome. Models this is cool. But then when I realized going through that, to create these forecasts and models, you need to know programming and math and physics. I'm that sucks. So even the people who are on TV, believe it or not, they had to go through some hell. I got my friend from college, literally he's currently on TV in Oklahoma. But we had to go through absolute hell. And then nowadays he's got a pretty simple, I don't want to say it's an easy job, but in terms of compared to the math that we had to do, you're not doing that. The models and all the programs you have all do it for you, right? But the actual, you have to do the classes to do the math that these calculations or these models were then, sucking in and understand. Sucked. I'm not recommending that. If that's what you're into, go for it. But it was not something that I enjoyed at all. I can't look back at my time at Penn State. Awesome time, sports-wise, fun, great. But the schoolwork side was so bad. I always look back and I'm that completely skewed my time. I look back and I'm I would never want to go back. Everyone's oh yeah, I wish I can go back. I would not want to go back strictly because of how bad my experience with the classes were. It was terrible. But that aside, Apple is just a monster waiting for a final. Yes. I think it's possible too. For sure. We shall see. Shorts did okay today. Apple puts. Oh yeah. Before I wrap things up, I may as well just mention what I did. Because I had bought some SOXL puts. I bought 2 SOXL puts, 20 strike or 25 strike actually, I believe, for September 16th expiration. I sold both of those today. Now, could it go lower? Sure. I just sold them because I saw us kind of rejecting off of this 22 the past couple of days. And I was okay, it's a good short versus 22. And luckily, we end up hitting 21.75 in the after hours. And then today, we're down here under 19. It was a big enough move in one day just to take the profits on those and move on. I want to buy calls on SOXL into next year, but I do want to see if we can get lower before I do buy calls. And, I could have kept the hedge on. I have other hedges, so it is what it is. I sold one of my Mara puts as well. MARA. I had 3 of these puts. I sold one today. The stock was down 8%. I sold one of them. I'm holding 2, looking to target $14. And if it does fall below 14 and Bitcoin cracks down and the market gets really, really weak, this can go down a lot more. 50 SMA looks like it's possible. Down here towards 10, that's coming up. So maybe down towards 4 or 12 could be a possible spot. I don't know. But I'm just watching Bitcoin, watching the markets to see how that plays out. And if it starts to bounce, Mara's got a lot of shorts in it too. So this could squeeze right back out. So just be cautious on a play like that as well. It's just where my head's at. But that is that. So hopefully that was helpful. Appreciate you guys for tuning on in like usual. Thumbs up button. I appreciate you guys for doing so. This platform is TradingView. I'll leave a link in the pinned comment down below as well. Everyone always asks, people like, oh yeah, how do you get these lines, these indicators, the volume profile? I believe you have to pay for like the lowest level of TradingView for that. It's not on the free version if I'm not mistaken, or maybe it is. I forget exactly, but I don't recommend people to buy the full version like I did. Like I bought the premium. This is like the top of the top plan you can buy. I don't recommend this. Please don't, because unless you really are like, going to get a lot of value out of it, you don't need that. Like the Pro or the Pro Plus are fine if you are ever going to pay for this thing, if you exceed what you can get on the free trial or on the free, plan with the ads or whatever, which kind of sucks, but it's not the end of the world. There's a couple things here, charts that I like to look at, which is why I pay for the premium, but also buy the annual if you're ever going to buy that, because you're going to save money. Please, if you ever do that. But please don't feel like this is something that, and it's not something that I'm ever push on people, but you don't need to do that if you don't want to. Weeble's charts are pretty darn good as it is. So you're going to get a decent amount of stuff here anyway. And, TD Ameritrade's pretty good too. They're going to get great charting on other platforms as well. So you don't have to feel like you have to buy stuff. But that said, I am going to wrap things up, and I will see you guys in tomorrow's stream. Most likely tomorrow afternoon, but it's possible I'll do a morning one. If you want notifications on so you don't miss it, great. If not, it's up to you. I don't force people to do that stuff either. It's up to you if you get value out of the videos or streams. And the plan is going to be Friday. We'll 100% do a Friday morning stream for market open, because I will literally not be here in the afternoon. But that's the plan. So peace out, guys. Enjoy the rest of your evening, and I will see you tomorrow.